SOFI is getting smacked this week. The whole software market is down, and options traders are already lining up like it's Black Friday. Except the doorbuster is emotional damage. This is not financial advice. This is market therapy with charts. All right, today's Fintech Spy episode is a SOFI technical read in a market where everything that remotely resembles software is catching strays. When the broader tape is red, SOFI doesn't get to be a unique butterfly. It gets to be another ticker on the grill, flipping on both sides until someone yells, "Is it done yet?" And the vibe is pretty simple. The chart is taking bigger steps down, the momentum tools are acting like they just saw their reflection and didn't like it, and the options chain is basically a crowd forming around two price zones like, okay, but where's the actual floor? We're going to hit analyst updates, quick news, weekly and daily chart read without turning this into a chemistry lab. Then we'll finish with the options oddities. Because nothing says confidence like betting on direction while pretending you're just hedging. First up, analysts. No brand new ratings after earnings. And honestly, that's an update in itself. It's like the analysts collectively looked at SOFI and said, I've already said my piece, and I'd like to keep my peace. No fresh hype, no sudden conviction buy, no dramatic re-rate, just quiet. Which in Wall Street terms is basically them putting SOFI on read and then going back to doom-scrolling macro headlines. Now the news, because SOFI always finds a way to sprinkle in something that makes retail traders squint at their screen like they're trying to decode a ransom note. The headline that jumps out, the chief risk officer took a loan against shares with Wells Fargo, and you've got it verified via SEC filings. Now, before anyone starts doing conspiracy math, this isn't me implying anything. This is me saying nothing screams risk management aesthetic like a risk officer doing something that makes everyone go, wait, what? To be clear, people borrow against assets all the time. But because this is SOFI, the market hears loan against shares and immediately turns it into a drama series with 6 seasons and a mid-season betrayal. Is he bullish? Is he nervous? Is this just a normal rich person move? Probably, but the tape does not care about probably. The tape cares about vibes, headlines, and whether the candle is red enough to qualify as emergency lighting. Next nugget. SOFI is back into quiet mode about upcoming offerings, which, if you've been around this ticker, you know what that does to the collective psyche. Quiet mode is when the market starts inventing its own bedtime stories. Maybe they're planning something. Maybe they're not planning something. Maybe they're planning something because they said they're not planning something. And the last one is spicy in a different way. Members are getting notifications about SOFI moving into the insurance market. Now that's the part where fintech fans go, oh cool, expansion. And traders go, great, another vertical for the market to misunderstand for 3 quarters. Insurance is one of those businesses where fundamentally it can be amazing. But sentiment-wise, it's not exactly to the moon. It's more like to the actuarial table. And nothing makes a meme stock brain short circuit faster than the words risk, insurance, and regulatory vibes. So yeah, the news is a combo platter of filings, quietness, and expansion hints, all landing in a week where the broader market is already feeling allergic to anything that smells like growth. Zooming out to the weekly, SOFI is taking bigger steps down, not like a gentle drift, more like the chart is walking downstairs while scrolling its phone. Momentum-wise, the weekly MACD is still fading toward neutral territory. I'm not going to read you the numbers like I'm doing taxes, but the important part is, this isn't a turning the corner posture yet. It's more like momentum is deflating, like a balloon you forgot in the car. At the same time, the weekly stochastic RSI is way oversold. Translation: the chart is emotionally exhausted, not necessarily ready to reverse in a clean cinematic way, but definitely in that zone where any slightly good headline could cause a snapback rally, or a bear market could just keep stepping on it anyway. Structurally, you've also got SOFI breaking through the 50 EMA on the weekly. That's the kind of thing that makes long-term chart people sit up straighter and start speaking in lower voices. It's not automatically a death sentence, but it is the market saying, we're not paying up for this the way we were a minute ago. And we're hovering around that 20.68 fib level, which, in Fintech Spy terms, is SOFI standing next to a pond wondering where the bottom is, except the pond is Fibonacci and the ducks are panic sellers. So the weekly takeaway is basically bigger red steps, momentum fading, oversold conditions building, and price sitting on a level that traders are absolutely going to treat like it's either a trampoline or a trapdoor. Now the daily chart, this is where things start feeling personal. Daily price action has now broken just below the 200 EMA, with the idea that it might retrace back into it. In Trader English, we dipped under the big average everyone watches, and now we're seeing if price can climb back up like nothing happened, or if this becomes the start of a whole new era of please stop. Momentum on the daily looks like it's starting to separate again in a bearish way, like the indicators are looking at each other and saying, I need space. That resplitting behavior is usually the opposite of what bulls want to see right after a big dump, because it suggests the downside pressure isn't done processing its feelings yet. The stochastic RSI on the daily is still oversold day after day, which is the chart equivalent of a person who keeps saying, I'm fine, while staring into the middle distance. Oversold can mean bounce incoming, but oversold can also mean welcome to a downtrend. We have snacks. And here's the soap opera. The 50 EMA and 100 EMA are about to cross, and they're close enough that you can feel the awkward tension in the room. If that crossover happens in a bearish direction, it's the kind of signal that makes trend followers nod quietly and start acting like they were bearish the whole time. So, daily view, we're under the 200 EMA area. Momentum looks like it wants to stay heavy, and the moving averages are lining up like they're about to deliver a previously on SOFI recap. All right, options time. Expiration is Feb 6th. Expected move is about plus or minus 1.38, and spot is around 20.80. So the market is basically saying, we could easily swing a buck and change from here. Don't act surprised. On the put side, the biggest open interest is parked at 20, and then 17 is the next notable pile. That tells you where the fear is clustering. Traders are very aware of the psychological round number. And then there's that, if it breaks, how ugly could it get? Backup plans sitting lower. On the call side, the biggest open interest is up at 25, with 24 also stacked, which is ambitious. That's not a little bounce. That's I would like the market to forget everything that happened this week. So the chain is basically drawing a little arena. Bears defending 20 like it's a gate, bulls dreaming about 24 to 25 like it's a reunion tour, and the expected move says the market can absolutely make both sides miserable before Friday just for sport. And because this is Fintech Spy, we'll say the quiet part out loud. A lot of these contracts are less prediction and more emotional support positions. People aren't trading volatility, they're trading feelings, and the chart has been extremely generous with those. Where do you think SOFI is actually headed into Friday? Does 20 act like a real line in the sand, or do you think the market treats it like a speed bump and keeps rolling? And if you're bullish, what would you need to see on the chart to feel like this isn't just a bounce that gets sold immediately? Drop your best SOFI coat mechanism in the comments. If you enjoy high-quality sarcasm, chart therapy, and watching options traders attempt to control the uncontrollable, hit like, subscribe, and share Fintech Spy with the friend who says it can't go lower like it's a spell. That's the read. The broader software market is down. SOFI is taking bigger steps lower, momentum looks heavy, oversold signals are flashing, and the options chain is basically a standoff between 20 fear and 24 to 25 hope. And just to repeat it for the compliance gods and your future self, this is not financial advice. This is entertainment, education, and a reminder that the market doesn't care about your narrative. It cares about liquidity and emotions. See you next episode, where we'll once again stand next to the chart pond, squint into the water, and pretend we're totally calm.